Welcome to Power Charting. I'm Bruce Fraser, your host. And this week we are going to hitchhike on the Market Watchers Live last week of relative strength. And so we are going to continue on with that very brilliant idea of devoting an entire week to relative strength, which we as Wyckofians think of as a superhero power. It's like having X-ray vision. Richard D. Wyckoff was an early proponent of relative strength analysis, and he did it in a way that where he looked at the swings, the rallies and reactions of stocks to each other, stocks to indexes, etc., to identify relative strength emerging and submerging. And it was a brilliant approach. And now we have all these great tools that we can employ using computers. And of course, StockCharts has excellent relative strength tools. And so let's devote some time today to this. But first, I want to talk about this 65 million year old Triceratops that was just discovered in North Dakota. When they discovered it, they asked it, they said, well, what's the key to your longevity? And the Triceratops said, well, I'm a tape reader. I read the tape, I study my charts, I'm a technician, I have a methodology, I execute on my methodology over and over and over again, and this is what it's allowed me to survive and thrive in financial markets and to stay within my method. And the other thing that the Triceratops said is, I don't have a market opinion. I just follow my charts, follow my tools, and follow the trend. And I'm thinking, well, I want to be a 65 million year old Triceratops too then. And so let's just keep working on developing our skill sets and being the very best we can be at being a tape reader and a chart reader using the Wyckoff method and other methods. And so here we go. Today's agenda. I promised that we would do a market profile every week. We're going to this week look again at the S&P 500. Then we're going to go into industry group with analysis with an eye towards relative strength with stock examples. And then we're going to look at some relative weakness characteristics, not because there's a lot of relative weakness in the market, but there is some. But we want to have the skill sets to be able to identify when relative strength is becoming relative weakness as a warning tool to us. Okay, so you've seen this chart before. We showed it in the last episode, which was 2 weeks ago. And we have a base count, accumulation count down here at the bottom. And this count took us up to 3015.18, 3034.08 in the S&P 500. And we had already worked our way up into this area. We had two continuation reaccumulation counts that also generated on the way up as we would expect. This is a 5-minute data point and figure chart, which covered more than a month of market activity. And we can see here that we got up into the largest accumulation count. And at that time, we said, look for the market to accelerate into a climax and then have to go through a period of pause of sorts and potentially reaccumulate for another move up, or also the possibility of having redistribution. Well, this market rallied right up into and bounced around and waited for the Fed decision, where the Fed cut a 1/4 point here yesterday. And so, there's all this confusion and all this concern about how the Fed did that. And that's the reason we're chart readers. We're Triceratops, because we want to just act on the market action and not focus on the opinions that constantly get written about Fed watching, etc. And they talked about how the Fed confused the situation and all that. But here's what we know, and that is that the Fed cut rates a 1/4 point. Now, the last 2 times when the Fed started to cut rates, it was right on the verge of a recession. And it took many rate cuts to stop, or, well, and who knows if these rate cuts even did stop the recession. But the thing that was taking place was the economy was already very weak at the moment of the rate cutting. Here, the economy slowed down a little bit, but the economy is still very strong. We have full employment. There's other parts of the world that are slowing down more than the US is, but we have a situation where the Fed has done a mid-course rate cut in an economy that's generally pretty strong. And so the last time we saw this happen was in the mid-90s. And when they did that in the mid-90s, it kicked off. Now they cut rates 3 times and paused. And so that kicked off a big boom in the IPO market, which we are on the early edges of right now in financial markets. Is we're seeing IPOs starting to come out. And so this could very well be an analog, the mid-90s to the present. And there's expectation still that the Fed is going to cut rates again, possibly in October or possibly in December. And this would argue for the continuation of the bull move that we're in. So this is generally bullish, not bearish, especially with the market bouncing around at its highs. So we could see here that our point and figure work was really good. And we said, hey, this is likely to stop the advance, fuel's used up. And so let's turn now to a current chart of the S&P 500. This is again 5-minute data, ATR scaling. And remember the area, we'll go back to that prior chart, but remember the area that we said 30.15 to 30.32, something like that. We got up to 30.26.37. That's the high mark on this point and figure chart. And you can see the point and figure really slowing down and going into either some kind of a reaccumulation or distribution type structure here. That prior chart was up into the trading day, August 1st. Here we're looking actually at a point and figure chart that is a day older. This is at the conclusion of the Fed day, July 31st. And we can't talk about this without trying to take a point and figure chart. And so getting a count, and here we can see that there are 2 potential distribution counts that really stand out at this point in time. So we have an up thrust. Again, this is strictly on a 5-minute scale, so this is a very small time frame. But this is an up thrust, potentially an up thrust after distribution, and then a failure back into the range and a sign of weakness that produces a rally up into what we're going to call last point of supply. So we count from the last point of supply over to preliminary supply. And so this first big bout of weakness here, we have a column of 31. 31 times 5.43 gives us a countdown to 28.56, 28.29. Smaller count, which may come into play from the up thrust over, gives us a count 29.32 to 29.10. Okay, so here we are back to this. You can see what was this count we had? 30.26, and look, we went right to the midpoint of this area, 30.26 area. And so this point and figure work has done a great job. It stopped the advance, created a trading range, and now we're building new count for some kind of a future move, which appears to not be complete yet. So we will keep up on that. Okay, so the other big topic today is to talk about the Russell 2000. We're going to use the IWM ETF, which is the Russell 2000 ETF, and look at this, really this compare and contrast situation between small cap in large cap. The Russell 2000 is part of the Russell 3000. The top 1,000 stocks are the largest large cap. These are all the stocks that are in the S&P 500 and more. And the Russell 2000 is the bottom 2,000 small cap stocks. And so what we're doing here is we're comparing large cap to small cap. So far, the large cap has been dominating. How do we know that? Okay, well, look at this trend. We had this beautiful trend that began in 2016. And let's just get a highlighter. And so you can see that, let's pick a better color, easier to see. You can see that there's this beautiful uptrend here throughout this for the Russell. And the Russell kicked off at the beginning of 2016 with the whole stock market, but relative strength was leading. And so this turned up the long-term moving average, got above, turned up the moving average in both relative strength and in price. Now, what we know about this relative strength index is that IWM to the S&P 500 is naturally a small cap to large cap ratio because of the composition of both of these indexes. So here we can see this nice kickoff in small cap. And our expectation is that once we get the relative strength turned up and in gear with the index, that they will tend to persist in their trend for months to years. And in fact, that is exactly the case. So you can see that we were able to draw a trend line on this point and this point that had the effect of containing the advance all the way into the middle of 2018. And notice how the Russell was leadership in 2018 when the stock market, the larger cap stocks, hit the wall. So you can see that that shows up here as a relative strength surge also. But notice what happened in the middle is that you have a period of sideways action, but with that was a robust uptrend in the Russell. Well, the sideways action in the relative strength, not uncommon when you're comparing indexes to each other, was a period when effectively the small cap stocks and the large cap S&P were performing, rising at the same rate. And so when they're, in this case, they're rising at approximately the same performance rate. And as long as the Russell continues to remain in its trend channel, we would continue to position and trade that or stay with it. Now, look what's happened is that we can see this accumulation area down here in the Russell. And so it looks like a large head and shoulders type base that we can see. We don't use those terms in Wyckoff, but that's a common term. Well, look here, same thing. We have very similar construction, but look what's happening. Since the Russell broke down and out of its uptrending channel, look at the failure of the relative strength. It's in a confirmed downtrend and has been for more than a year, a long time. Well, here, I want to show you one other tiny thing. And let's just change colors here because look at this. Look at this peak here to this peak, here to here. And look at this peak to this peak in the index itself. Non-confirmation of relative strength at the conclusion of the advance is a warning. This is our X-ray vision character, part of it, is that it's saying that the Russell is losing its losing its relative performance in that uptrend, which took place for about a half a year. And at that point, the Russell was pushing up against the top of its trend channel, as we can see, and was getting ready to fail. And boy, did it fail. it really collapsed. It went from approximately 170 down to 125. That's a huge haircut for an index. So now let's compare this area here to this area here. How are we going to do that? Because we can see here that the relative strength continues to be weak. Okay, well, this is the accumulation count for the Russell back in 2015, 2016, and look at what we got as a price objective: 153.60, 167.04, and we missed, this was where the count went, we missed the high by 2 boxes, 2 entries. Pretty darn good. And it went through there very briefly, and then this is where the failure started. This was the relative strength failure that we just analyzed. Now we can see that there is a very similar family resemblance now to what occurred back in 2015, 16 into 17. And they actually have the same number of columns of count. So this gives us 63.36 points of potential here in this accumulation range. Well, this takes us up to a new high at 190.08, 209.28. And so that's a very important rally from the area that we're at, but there is a difference between then and now. Look at the volume surges on the upward moves, right? Like right here, and we can see it right here. These are big catapult walls that are jumping up and out of the accumulation area and volume. And look at this one, the best of all. This is showing super demand for the Russell. And this was when the Russell was in a relative strength outperformance mode. Well, and then off it went, and it stayed in an uptrend for a long time. Well, we're not yet seeing the kind of dynamic volume that we would need to see to tell us that the Russell is in a strong demand posture. And so this is a concern, and but this can come at the end of the accumulation, and so we will be watching for that. This is a 3-box reversal point figure with ATR scaling, which produced a 1.92 scaling convention over here on the side, and you could just use standard scaling. We used 2-point scaling just because we were at 100. We crossed from a 1-point scaling to 2-point on the traditional. Okay, so now we have a great potential in the Russell. We need volume, so let's zoom in. Here is the reaccumulation structure that we have since the end of 2018. Really nice kickoff to the advance in the Russell into a trading range. Climax, automatic reaction, secondary test, and here that we look at this as though it was distribution, and then what happened was we got a beautiful spring. And so the spring came in, produced a phase C low, we would say, and the spring was tested right here, and upward it went back into the range, and now it's pushing up towards the resistance area and touched it right here a day ago. And this is through July 31st. But look at what is happening with the volume. Volume is starting to show some good activity on the bullish side. These volume days are quite good. This is a great 3-day volume advance. Now what we need to see is, and look at this volume, huge amount of volume, but this was on the Fed day. Notice that the Russell didn't have a big decline like the large cap indexes did. Aha, This is interesting because this really does tell us that the Russell could be is under accumulation. It's had a very shallow reaction here into a backup or a last point of support. And now if it's in a position where it could pivot up out of this area, it could be up and out of the reaccumulation structure, if that's what it is, and off into a new uptrend. And we would look for it to do that on expanding volume. Very important. We would look for that here, and we would look for it in the point and figure chart. Okay, so let's just take a couple of counts. These are intraday counts. So this is 30-minute data, and traditional, we just did standard 1-point scaling here, even though it's above $100, because we're looking at intraday data. And so we have a count here that goes in this accumulation area, and let me just show you where that is. That's right across here. That's what we're looking at. And I'm going to encourage you to count this whole structure, because there's a much larger count that may confirm the 3-box reversal count that we just looked at. So here, this goes 170, 176. Pretty good rally from here, swing trading. And then we have, after a jump up, this area where it got dull and quiet, which is this area right here. This area is, we have another count, goes 171, 173, and confirms this previous count. So, interesting structure. We may be seeing hints here of small cap outperformance. This is going to be something for us to really look at. The relative strength is still in a downtrend, but let me just go back and show you this. This relative strength was in a downtrend here into the lows in 2016 and didn't get above for a number of months, and started to get above when the count was complete on the point and figure. And that could very well be the case, is that we need to have relative strength. We need to get the relative strength into an uptrend here and turn it up. Does that mean that we don't trade it? No, it doesn't mean that at all. But what it does mean is that we want to, once we do trade it and we position it, we need confirmation. We need confirmation that we're going to get above this resistance area. We're going to need confirmation of volume. Some things need to happen, even though we may be following this up and out, if we see a hint of relative outperformance. Okay, we have a little bit of time left, so I wanted to look at some relative strength additionally. And this is building materials. And somebody said on Fed Day that, what is Fed Day? Well, it's mortgage broker Christmas. And so that kind of made sense to me. And I thought, well, if it's mortgage broker Christmas, let's look at building materials, because this means that stuff's going to get built. Rates are lower. And so here we can see, after a pretty sharp decline, because the Fed was raising rates a lot, 9 rate increases into the end of 2019. And here at the 2019 lows, the Fed basically just yesterday took back the rate increase that they had in 2018. And so that's all they've done here. But notice what's happened with building materials, is they went from being a severe underperformer. Look at the persistency of this decline in relative strength. Even though the market was going up, it was building a top. Look at this top. Well, the relative strength's failing. And so this is what a top looks like. Look at the poor quality of this rally. This is what tops look like. So if you want to confirm a top in something, go back and look at the relative strength relative to it. And I like to do it on a weekly basis. So I focus on the weekly relative strength, not on the daily. I look a little bit at the daily, but it's not nearly as important to me. And then look at this break. Oh my gosh, it goes up, it rallies into a last point of supply, and then look at this huge breakdown. It's just spectacular decline. Well, so here we have an attempt to go up, we're rallying. And so now you have an uptrending relative strength and an uptrending price confirming each other So this is terrific. Let's look at a couple of building stocks. Here's Masco. They just reported terrific earnings. What a surprise. But look at the relative strength. Goes from deeply oversold. Look at the relative strength failure here, right there. Boom. Distribution, big decline. Now we have a turn up, and look at this. Above the moving average, pulls back. Test, test. It's testing a rising moving average from above. So it says in gear up. And here we can see in gear up and great earnings. And look at this jump of this area right here. So we would expect that these stocks have the potential to persist in their uptrends now for months to years, potentially. Owens Corning. So making roofing, insulation, things like that. Look at this accumulation type structure. Big, encourage you to take account. Nice jump out right here, and good earnings. We'll look at this base in the relative strength, and it's just now getting above the moving average, confirming it from above and turning up the moving average. In gear, everything is up. Okay, running out of time, so I'm going fast. U.S. Investment Services, this is interesting. This is turning up, it's knocking on the door of the relative strength right here, but it's not above it yet. So the relative strength is still in a persistent downtrend. Distribution, look at the distribution that's following the relative strength failure. Well, now price is getting above on the industry group, and it's turning up. Well, the relative strength's close. So what do? I was going to show you here, this is an 11 box count in Schwab, which went up to like, don't hold me to this, 57.61. Bang, went right to the highs. Well, this is an 11 box count too, and it goes up to 71-ish. And so there's two counts we could take. The midpoint is also a place we can go. And so here is a lot of potential in Schwab. Well, here is Schwab's long-term chart. Trend is down on relative strength, and so we have to be really careful. Possible accumulation. Well, do we not trade that? Well, sure, we can trade that because we see now, look, volume's expanding, and it's got good activity, good bullish bars, good demand bars as it's pushing up and trying to get through the moving average. So this is good action, but it could still be early, and it could be that the relative strength kicks in and keeps it going down. But there's some potential here, and there's some bullish activity, and so we want to keep our stops tight, trade closely, get confirmation of the relative strength as it's going up, or just wait for the relative strength to turn. Here is Goldman Sachs. You can tell I'm running out of time. Look at this, big base. Look at this long-term downtrend beginning of 2017. Oh my God, look at the big top. And so here is this huge failure. Well, the relative strength warned on that, but now the relative strength's telling a different story. Beautiful jump up and out of this area for a big move up. The relative strength is now above its moving average. It hasn't turned it up yet, but this is a very constructive action. So the volume's trying to expand. It's not really super expanding, but it's not bad. And so now we would look for a pause or a pullback, and then an attempt to confirm the relative strength upwards. Thank you so much. Had a great week, relative strength week. Talk to you next time. So long.